Hello, everyone, and welcome to another edition of the Smart Investor Market Show, where smart investors get their up to date price analysis and market information. Okay, today we're going to look at the S&P 500 and the fact that stocks are stalling out while the US dollar is up against critical support. And if the US dollar breaches this support area, that will mean a major turning point in the dollar. And we're going to take a look at that. We're going to look across the different currency pairs, the Canadian dollar, the US dollar, the euro, the British pound, etc. We'll take a look at the currencies. We'll also take a look at gold. Gold is up quite sharply today, and we're going to be looking at it. I have been speaking about gold over the last couple of weeks, and I've been explaining that I'm looking for gold to do very well and continue to do very well for the remainder in the year, and that analysis is bearing out at this point in time, where we see gold accelerating to the upside, and I believe that we have put in a longer term bottom in the gold market. That's not to say we aren't going to get the market moving up and down from here, and we will get some retracements, but the longer term trajectory on gold at this point in time is to the upside, and I believe it is a major opportunity to see some good gains. But firstly, let's take a look at the S&P 500. Market is pretty much unchanged today. We see price action where the bulls and the bears have been trying to push the prices either way, and eventually we ended up with a market that is little changed. The S&P 500 today, as you can see from the chart here, we have three. This is what we call three doji candles. And doji candles essentially mean that the price action is very narrow, and these are the doji candles here. This means that prices are trading in a very narrow range. We had it to here with a huge up candle, and then the market is just moving sideways and without much direction. Today the S&P 500 finished up one. Well, it's at up 1.19 points as of this recording here. The Dow Jones Industrial Average is down 5, and the Nasdaq up 17 points. The VIX is up slightly, 0.62% at 0.07. But we have to, for pressure to get relieved on this S&P 500 and the selling pressure to go down, we need to break this series of lower highs, lower lows. The market needs to start to see some higher highs and take out this 2480 level on the S&P 500. If we do see that, then that will discourage the bears. But once we are below that level, then the bears will think that this sell signal, and traditional technical analysis has this as a sell signal. We had a doji here, a down candle here, and then we had a follow through. So this is considered a sell signal, and that's why we're having this uncertain price action at this point in time. Looking at the Dow Jones Industrial Average, we have a similar situation where the Dow, looking at the Dow Mini, where we see the Dow, another doji candle here, 3 in a row, similar to what the S&P 500 is doing. So we have the markets tracking in a similar situation, which is quite common for the different stock markets. They are tracking together, and what we're looking for in the case of the Dow is the market to close above this 22,000 and 22,050 level, and that would put the bears under pressure, and we could see some more gains in the market. All in all, because folks have always asked me what's my opinion on the markets, We have been in a massive uptrend ever since 2009, and I believe most of the gains are behind us for stocks. I believe this is the last 10% or so of this rally before we get a major correction in the market. Is this the very top in the market? I'm not sure at this point in time, but I can say that we are in the top 10% of the rally. So at this point in time, when it comes to stocks, what I will be doing is tightening up my stop loss levels on the many of these stocks, because at any moment we could see a major correction in the value of these indices. If the market still continues to go up, I will continue to hold long stock positions. But what I'm seeing from a lot of momentum indicators is that this market is due for a correction. Okay, looking at the overseas markets, let's take a look at the German DAX. German DAX is moving down slightly. We see the series of lower highs, lower lows on the German DAX. So it is weak. It's correcting. That does not say the market cannot surge to the upside, because if we see the Dow and S&P 500 start to really move up, I believe that the German DAX will follow suit. Looking at the FTSE over there in the UK, we see that the market is still near its all-time high, up at 7,600. We're trading at 7,401. So a gradual or a minor pullback, similar to what we're seeing with the S&P 500 and the Dow. If we do close below that 7,200 level and the 7,000 level, that would be of great concern. And what that would tell us is that we are in for a longer term decline in that market. Moving on to the U.S. dollar index, and at the beginning of the show I said that the U.S. dollar index is up against critical support levels, and as you can see here, this 92 level, I've been speaking about it for a number of weeks, is on the threat. The market is currently at 92.26 after trading down sharply today. So if the dollar is to continue to have its uptrend over the last 8 years or so, it has to maintain this 92 level. If we do close below 92, then that would signal to me a longer term top has been put in the dollar. And at this point in time, it's a matter of selling rallies that will happen in the dollar. That's not confirmed yet, and that's why we want the prices to tell us exactly what is happening. But the market is coming up to that level as we speak. This is also one of the lowest closing levels we have seen in the dollar since 2014. Last time the dollar closed near the 92.21 level was in December 2014. So this is a major milestone that we'll be paying attention to this week for the dollar. Looking at the euro currency broke out to new highs this morning, and the last time we saw this level in the euro was back in 2014. The market is coming up onto this 120 region. So I believe that the euro has or is looking to put in a longer term bottom here. And if we do get confirmation from the US dollar index, that means the euro will have put in a bottom, and we could see a longer term bottoming out process and a longer term rally in the value of the euro currency versus the US dollar. Last time the euro was in a bullish market against the dollar was in the 2000s, where the market went up through much of 2000. Let's see if this charts are loading very slowly today. I don't know why. It's not coming up here. But the euro was in a huge bull market from 2001 up to 2008. And since then, the dollar has been in a bull market, and now it looks like the euro is turning the tide on the dollar. So we're seeing stuff like the dollar moving down. We're seeing stuff like gold moving to the upside, and that that tells me that the dollar could come under extreme pressure over the next couple of months. Taking a look at the Canadian dollar. Canadian dollar again up against the US dollar, trading near its high of the year, uh, in the 80.61 level. Canadian dollar has been under some slight pressure today because of the decline in value in crude oil. Crude oil has been down sharply today, and it has affected the Canadian dollar. Looking at the British pound up sharply today, trading at 129.48. So we're seeing the different currencies gain momentum against the US dollar, with the exception of the Canadian dollar. Looking at the Japanese yen up against the US dollar, up so ever so slightly, but up against the US dollar today, and it's still trading against resistance in this 92 to 92.50 level. Looking on the crude oil market, we see that oil prices moved down sharply today, and oil has been under some tremendous pressure. I keep pointing out the fact that we are seeing lower highs, lower lows here, and until that pattern is broken on crude oil, the prices could be very negative. We need to see prices close above the 51 to 52 dollar level in crude oil. But the market that has really broken out today is the gold market, and the price action in gold is quite positive. As you can see here, this is the triangular consolidation I said gold was in, and we see the market breaking to the upside. Now, what can happen from here is that the market can continue to accelerate to the upside, or we could get a slight retracement and then another move to the upside. All indeed possible. But I believe a longer term bottom has been put in gold, and we should see gains over the next couple of years. Yes, there will be time, or next couple of months, sorry. Yes, there will be times when the market pulls back, but we are in a positive light with gold. What will really set this market on fire, or even confirm this bullish momentum, is if we can close above the $1,400 level. A close above 1,400 on gold would send the bulls into a frenzy, and we would see a pattern of higher highs, higher lows in the gold complex. So I'm very positive on gold, and it's important to be positive on markets because, as I said, I believe we are in the last stages of the rally in the stock market, and in order to make money in these markets, you have to look what's next, what's happening next, what's the next big thing, and gold stocks, the gold sector could be a good place for profits over the next couple of months. So we'll be keeping an eye out on this. As with trading, as with investing, things can change, and things can change quickly. That's why we monitor markets on a daily basis. We don't just buy something, hold on to it, and forget about it. We buy something, and we monitor it day to day to see if the conditions are getting more favorable to our position or not favorable, and that is very important. Taking a look at silver, because we want to see, along with gold, we want to see the silver market moving to the upside also. And silver is up today. We still are trading against this longer term downtrend line. But what I want to see with silver is a market close above the 1750 to $18 level. A close above the $18 level here would signal to me that this series of lower highs, lower lows will be broken or has been broken, and we could see a general uptrending environment. And just to speak about an uptrend in markets, an uptrend does not mean if the market move from $18, it will just go to 19, 20, 21, 20 and go straight up. Look at this market when it has been going down. Markets normally go up, go down, go up, go down, go up. So an uptrend is up, retrace, up, retrace, up, retrace, up, retrace. That is an uptrend, a series of higher highs and higher lows. That's what makes up an uptrend. So the markets we are looking for are looking at the U.S. dollar and the precious metal markets. Copper has moved to new highs again today. We highlighted on Friday that this market is moving to the upside. It is at the high of the year by a long shot. And the last time we saw copper prices at this level was in, let's look at the chart, was in October, November of 2014. So copper has been perking up and moving up nicely over the last couple of months. It was in a consolidation similar to what gold did, and we see that the market broke out of that consolidation and is moving to the upside as we speak. So this is a market that's in a pretty healthy uptrend. How you can take advantage of copper, how you can take advantage of gold if you are not a currency trader or futures trader is by looking at various ETFs that trade gold, silver, copper. And the GLD ETF in gold, let's just take a look at the GLD. It almost mimics the price of gold. So when gold moves up, GLD moves up. GLD has broken resistance along with gold. We had resistance here in this 123-ish area. Market came up here, came down, came up here, went down, came up, and is trading through that level as we speak. So that is very positive for the GLD. And this is a very good ETF to get involved in and get yourself some exposure to gold. You don't really have to go out and buy physical gold because everyone thinks that you can expose yourself through the markets. Okay, so we'll be keeping an eye on this for the rest of the week, especially. Thank you very much for listening. If you like the video, hit a like on the video, subscribe to the channel to get up-to-date market analysis and up-to-date profitable opportunities, because that's the whole point of this show, to highlight trending markets that are giving you profitable opportunities and opportunities to make some money in these markets. Thank you very much for listening, and I hope you have a wonderful day.